All right, let's dive in. Today, we're taking a deep dive
Deep dive.
into the heart of Malaysia's food scene.
Ooh, sounds delicious.
Well, not exactly the food itself this time.
Okay.
We're tackling something that can leave even the most experienced restaurant owners feeling a bit
Bit what?
taxed. We're untangling the sales and services tax.
The SST.
You got it.
Not as scary as it sounds. Think of it like
Like what?
a little 6% spice added to the price of your favorite Malaysian dishes.
Okay, I like that analogy.
By the end of this, you'll be a pro at navigating those menu prices, deciphering those receipts, and,
Understanding how it all works.
exactly.
Before we get into the details,
Yeah,
can you give us a little history lesson? I know the SST isn't exactly brand new in Malaysia.
that's right. It actually predates the goods and services tax.
The GST?
Yep. Which was in effect for a bit, but then got replaced by the SST back in 2018.
Interesting.
And switched back. Well, there were some good reasons for it.
Okay, I'm intrigued. Spill the tea on this whole SST versus GST saga.
Well, simplicity was a big factor. The SST is a single-stage tax.
Meaning?
It's only applied once, at the point of sale. Like, imagine making laksa. The SST is like buying all your ingredients at the market.
And paying tax on the total.
You got it. One single tax on that whole purchase.
Okay, makes sense. So the GST, it was more like paying tax on each ingredient individually as you buy it.
Exactly. Multi-stage tax. It was applied at multiple points in the supply chain.
Ah, I see.
More complex for businesses to manage, and led to some complaints about hidden costs for us consumers.
So the SST, with its one-time tax at the end, simplifies things for both restaurant owners and us hungry diners.
Precisely. And that simplicity was a major selling point for bringing it back.
Makes sense.
Less burden for businesses, more transparency for consumers.
Transparency is always good, especially when it comes to our hard-earned ringgit.
Absolutely.
Now, this 6% SST, does it apply to, like, every type of restaurant experience?
Pretty much.
Am I paying it on a fancy tasting menu, a quick coffee at a kapitium,
Yes.
even drinks at a bar?
Yep. All of that. Whether you're going all out, grabbing a casual lunch, or having cocktails.
So that 6% is everywhere.
It is. And it brings us to a crucial question. How does this actually affect those prices we see on the menu?
Right, because running a restaurant is already tough.
For sure.
They can't just absorb that extra 6% and still,
And keep the lights on.
Exactly.
It's a balancing act. They have to factor the SST into their pricing.
But also stay competitive.
Yeah, and make sure people actually come back for more.
So what do? Just slap an extra 6% on everything.
That's rarely the best strategy. Sudden price hikes can scare customers away.
Right.
Instead, restaurants have come up with some clever ways to incorporate the SST without,
Without causing sticker shock.
Exactly.
Okay, tell me everything. What are these secret strategies?
Well, one common approach is gradual price increases, spreading that 6% across different menu items over time.
So no sudden jumps?
Nope. More like a gentle simmer than a scorching heat.
I like that.
Another tactic is bundling. Set menus, combo deals, where the SST is kind of tucked into the total price.
Makes it feel like a good deal.
Right. You're getting more bang for your buck, even with a tax.
I love a good deal.
Then there's the art of highlighting value.
Right.
Showcasing those quality ingredients, the service, the whole experience.
So you're paying for more than just the food.
Exactly.
Yeah.
And if it's a memorable experience, that extra 6% might not feel so bad.
True. But even with these strategies, managing costs is key, right?
Absolutely. Cost control is crucial when you have that extra tax to consider.
So it's not just about raising prices.
Yep.
It's about finding efficiencies throughout the business.
Exactly. Think negotiating better deals with suppliers, minimizing food waste.
Maybe even adjusting portion sizes.
You got it. Without compromising on quality, of course.
It's a whole approach.
It is menu engineering. It's about more than just listing dishes.
Okay.
It's about strategically promoting those high-margin items.
The ones that really contribute to the bottom line.
Yes. You might notice them strategically placed, described with mouth-watering language, or even featured as specials.
Well, they're subtly nudging us towards those profit-boosting dishes.
Subtly, yes.
Icky.
And some restaurants even choose to be completely transparent by adding a separate 6% SST surcharge to the bill.
Interesting.
It might not be glamorous, but it's honest and upfront.
I can appreciate that, but not every customer is going to be thrilled about any price increase, no matter how subtle.
True.
So how do restaurants navigate those conversations about the SST?
Communication is key. Imagine getting a bill with a mysterious 6% charge and no explanation.
I'd be confused.
Exactly. That's just asking for frustration.
So what are some best practices?
Itemized receipts are a good start. You can see how that 6% is applied.
Instead of it being lumped into a big total.
Right. And having well-trained staff who can confidently answer questions about the SST is crucial.
Makes sense. They're the ones interacting with the customers.
They are. They need to explain it clearly and politely. And of course, keeping all those menus, both physical and digital, updated with accurate prices, including the SST.
Setting those expectations up front.
Exactly.
Now let's flip the script and talk about the restaurant's perspective. How do they register for SST and make sure they're playing by the rules?
The first step is figuring out if they even need to register.
Is there like a threshold?
There is. The magic number is RM 500,000 in annual turnover.
So if a restaurant hits that revenue milestone, it's SST time.
You got it. And it's not just about hitting that number and then scrambling to register.
They need to be prepared.
Exactly.
What does that involve?
Gathering the necessary documents. Things like their business registration certificate, bank statements, financial records.
Proving their turnover?
Right. It's all about transparency, showing they're legitimate.
Makes sense.
Yeah.
But I'm hoping in this digital age, they don't have to actually go to a government office with stacks of paper.
Thankfully not. The whole process is online now.
Oh.
There's a user-friendly portal called MyST where they create an account, fill out the form, upload those documents.
Streamlined. So once they're registered, what are the essential things they need to do to stay compliant?
The most obvious is collecting that 6% SST on all taxable services.
Seems straightforward.
It is, but they need to apply it correctly to every applicable transaction.
No cutting corners?
Nope. And proper invoicing is crucial.
Meaning?
Those invoices need to clearly state the SST charge as a separate line item.
No hiding it.
No way. Transparency is key. Then there's record keeping. Super important.
I bet. I imagine the taxman loves good records.
Meticulous record keeping is a must. They need to document every transaction subject to SST.
And keep those records for
At least 7 years.
7 years. That's longer than some of my relationships.
But the tax authorities have a long memory. It allows them to conduct audits, ensure compliance even years later.
Wow.
And finally, they need to file those SST returns every 2 months.
Like a regular check-in?
Exactly.
And I'm guessing there are consequences if they don't tick all those compliance boxes.
Oh, absolutely. The penalties can be quite hefty.
Like?
Late registration can lead to fines, even back taxes.
Ouch.
Yeah, better to get things right from the start. And those bi-monthly filing deadlines? Missing those will cost them RM50 per day for every day they're late.
Per day?
Per day, up to a maximum of RM10,000.
Yikes. No procrastinating here.
Nope. And if they underpay their SST, well, they'll have to pay the missing amount plus interest and potentially more fines.
So accuracy is key.
It is. It's in their best interest to get it right the first time.
Okay, so they've filed their return, logged into MyST, and are ready to pay. What's that process like?
Pretty straightforward, actually. They use the SST02 form, enter their total taxable sales, and the system calculates the 6% tax owed.
Sounds user-friendly.
It is. But there are some common pitfalls they should watch out for. Calculating those taxable sales leads to underpayment and those penalties we talked about.
Yeah, I'd rather spend that money on more food.
Right. And sometimes restaurants might overlook certain services that are subject to SST.
Like what?
It's not just food and drinks. It also includes things like catering or private events.
So they need to review all their offering.
Thoroughly, yes. And of course, missing those filing deadlines
Those pesky deadlines.
that get you every time can lead to those big penalties.
Right. Now let's talk about the dreaded A-word audits.
Ooh, scary.
What happens if the taxman comes knocking? How can restaurants prepare?
Audits are normal, so no need to panic. The key is to be prepared.
Okay.
Remember those meticulous records? That's where they come in handy.
So important.
If you're audited, you need to cooperate with the RMCD officials, provide all the documents they request.
Transparency is key.
It is. And if they find discrepancies, they might require you to file an SST adjustment.
To correct any underpaid or overpaid taxes?
Yep, that's all done through my SST too.
Okay.
It's straightforward, but it helps to understand the regulations and how to navigate the system.
Before we move on to exemptions and reliefs, any final words of wisdom for our listeners who are restaurant owners or just trying to understand SST?
Whether you're running a restaurant or enjoying a meal out, knowledge is power. Understanding how the SST works helps you make informed decisions.
About pricing, what's on your bill, everything.
Exactly. So stay informed.
Okay, so we just took a deep dive into the nuts and bolts of SST.
The registration, the compliance, even those audits.
Yeah, all the fun stuff.
But let's look ahead now.
Okay.
The restaurant scene is always changing, right?
Right.
So how might the SST need to adapt to keep up?
It's a good question.
It's fascinating, isn't it?
Well, it is.
We've gone from like handwritten orders to online bookings, delivery apps.
Oh, yeah. It's a whole new world.
This digital wave is definitely shaking things up.
In the tax world.
Even the tax world.
You mentioned those food delivery platforms earlier.
Yeah.
I'm curious, are those delivery fees taxed?
Ah, good question.
Because sometimes those fees feel like, I don't know,
Like you're paying an arm and a leg.
pretty much.
And the truth is, the current regulations aren't always super clear on how SST applies to them.
Really?
Some platforms include it in the taxable amount,
Okay.
while others treat it separately.
So there's a bit of a gray area.
Yeah, there is. Especially as these platforms get more and more popular.
It seems like there's room for clarification.
Definitely. And it gets even trickier when you add in promotional discounts, loyalty programs, all those perks.
Yeah, I love those perks.
But how do you factor those into the SST calculation?
It's a headache waiting to happen.
It's a bit of a puzzle.
So what's the solution? Do we need a whole new set of rules just for the digital food world?
It's a possibility. The government might need to step in and provide clearer guidelines.
Make it fair and transparent?
Exactly. Easy for everyone to understand.
I like easy.
Speaking of new models, what about those ghost kitchens, cloud kitchens?
Oh, yeah, those are interesting.
They're popping up everywhere.
They're like the ninjas of the restaurant world.
They really are.
Yeah.
And because they don't have the same overhead costs as traditional restaurants.
No fancy storefronts, no waiters.
Exactly. There's debate about whether they should be treated differently under the SST.
Like separate rules. A different tax rate.
That's the question. Some argue that a lower SST rate for cloud kitchens could give them a boost,
Oh, okay.
lead to lower prices for consumers,
I like the sound of that.
and potentially create more jobs in that delivery sector.
Makes sense.
But traditional restaurants might not be so happy about that.
I can see why. Unfair competition.
Exactly. They'd argue that everyone should operate on a level playing field.
It's a tough one.
It is. Supporting innovation versus fairness.
Curious to see how it plays out.
Me too. It's a balancing act for the government.
For sure. Okay, before we go too far down that rabbit hole,
Yeah.
let's come back to something we mentioned earlier, sustainability.
Right.
We talked about potential tax breaks for restaurants going green.
Mm-hmm.
I love that idea, but how realistic is it?
It's gaining momentum globally, actually.
It is.
Lots of countries are looking at ways to use tax policy to encourage eco-friendly practices.
Okay.
Think about it. Tax breaks, subsidies for restaurants that reduce waste, use energy-efficient appliances, source local ingredients.
That aligns with the whole sustainability push.
It does, and it appeals to those eco-conscious consumers.
It does. Like me.
It's a win-win for everyone.
It really is. Okay, let's get practical for a sec.
Sure.
For our listeners out there running restaurants, what are some key tips for navigating this whole SST world?
Good question.
How can they stay ahead of the curve?
First and foremost, stay informed. The tax landscape changes.
It does.
Make it a habit to check for updates from the RMCD, the Ministry of Finance.
Stay in the loop.
Yes. And don't underestimate a good record-keeping system.
Okay.
Every transaction, every invoice, every receipt, keep it organized.
No more shoe boxes full of receipts.
No more shoe boxes. Look into digital record-keeping systems.
Much easier.
They really are. And when it comes to those bi-monthly filings,
Yeah.
accuracy is key. Double-check those sales figures. Make sure you're capturing all taxable services.
Identities.
Don't miss those deadlines.
Because those penalties.
They'll get you. Now, what about our listeners who are just, passionate foodies?
Yeah, what about them? Any advice?
When you're comparing prices, remember that 6% SST.
It adds up.
It does, especially if you're on a budget or dining with a group.
True.
Don't just look at the menu price. Factor in that extra cost.
Good tip. Those percentages can sneak up on you.
They do. And check your bill.
Okay.
Is the SST itemized? Do you understand the charges?
Transparency is so important.
It is. And if you're unsure about anything, just ask.
Ask your server.
Exactly. Ask about the SST, how it's applied.
It's your right as a consumer.
It is. Now, let's go back to pricing strategies for a minute.
Okay.
We talked about menu engineering earlier.
Right. Highlighting those high margin dishes.
Exactly. It's about showcasing those culinary stars.
The ones that help carry the weight of the SST.
Yes. You might see them featured prominently, described with really enticing language.
It's all about subtle persuasion.
It is. And then there's pricing psychology.
Oh, tell me more.
It's fascinating, really, how customers perceive prices.
Okay.
You've probably noticed a lot of restaurants use prices ending in 99 or 90.
Oh, all the time. Like RM 9.90 instead of RM 10.
Exactly. Feels so much cheaper, right?
It does.
That's pricing psychology in action.
Clever.
Those little tweaks can make a big difference in how customers perceive the price.
Even with that added SST.
Exactly. Minimizes the sting.
I like it.
Another trend is dynamic pricing,
Dynamic pricing.
like those ride-sharing apps.
Oh, surge pricing for restaurants?
You got it. During peak hours, prices on delivery platforms might go up slightly,
Okay.
and during slower times, they might offer discounts or promos.
To get those orders coming in?
Exactly. It's all about maximizing revenue and managing those operations efficiently.
Especially with online ordering becoming so popular.
Exactly. Dynamic pricing is still relatively new for restaurants,
It is.
but it'll likely become more common as those digital platforms continue to grow.
Wow, technology is really changing the game.
It is. Now, let's not forget about those compliance audits.
Right.
We talked about record keeping, but what can a restaurant actually expect if they get audited?
It sounds scary.
First, don't panic. It doesn't mean you've done something wrong.
Okay.
The RMCD does regular audits to make sure everyone's following the rules.
So more like a routine checkup.
In most cases, yes. But if they see something that looks off, they might investigate further.
Makes sense. So what happens during an audit?
They'll usually send a letter outlining the scope of the audit, the documents they need.
And that's where those organized records come in.
You got it. They'll want to see sales invoices, receipts, bank statements, anything that backs up your SST filings.
Sounds like a digital system would be super helpful.
It would. They can be game changers. Now, will they always come to the restaurant?
Good question.
It depends. For complex audits, they might do a site visit to verify things or observe operations.
So picture a tax official just casually strolling through your restaurant.
It's possible.
Mm-hmm.
But for routine audits, a lot of the communication happens electronically.
That's less intimidating.
It is.
Mm-hmm.
Now, what if they find discrepancies? They might issue a notice of assessment.
What's that?
It outlines any extra taxes you owe or penalties.
So fines, back taxes, all that.
It's possible, but remember, you have options if you disagree with the assessment.
You do.
You have the right to present your case, provide your own documentation.
So you can fight back.
In a way, yes. It's important to know your rights. So, navigating the SST system can be a bit overwhelming, especially for those new to it all.
It can.
Consider getting guidance from tax professionals.
Like hiring an expert.
Exactly. They can help you navigate the complexities, ensure you're compliant, and maybe even find ways to minimize your tax liability.
It's like having a culinary and tax expert all rolled into one.
Exactly. It's a valuable investment.
So we've really explored this SST thing from all angles.
From the history to the future, all the challenges.
Yeah, it's been quite a journey.
It has.
Now let's zoom out for a minute.
Okay?
Big picture time.
I like it.
The SST, like any tax system, has its pros and cons.
Right.
What are some of the good things about it?
Well, it's pretty simple compared to that GST we talked about earlier.
Especially for smaller businesses, right?
Exactly. Less paperwork, less confusion.
Simplicity is always a plus. But what about for us, the consumers?
That single stage tax applied only at the end. It's more transparent.
Okay.
You see the price, you add 6%, and that's basically it.
No hidden surprises.
No hidden surprises. You know what you're getting into.
Straightforward. I like it.
Yeah.
But are there areas where the SST might need some, I don't know.
Some improvements.
Yeah, some tweaking.
Of course. Keeping up with the restaurant industry is a challenge.
It's always changing.
It is. Like we talked about, those regulations might need some adjustments for all those digital platforms, cloud kitchens.
To make it fair for everyone.
Exactly. And there's also that idea of connecting SST to bigger goals.
Right, like encouraging sustainability.
Exactly. Tax breaks for eco-friendly practices, it's a great idea.
It's a win for everyone involved.
It really is.
Yeah.
Now, before we wrap things up,
Yeah.
any last bits of wisdom for our listeners? Restaurant owners, food lovers, everyone.
Let's hear it.
For those in the culinary world, stay informed, be adaptable. The tax world is always changing, so keep an eye on those updates from the RMCD, the Ministry of Finance.
Stay in the know.
And don't hesitate to reach out to those tax professionals if you need help.
Experts can make a big difference.
They really can. And for our food-loving listeners,
Yeah, what about them?
be aware, be informed.
Okay.
Understand that 6% is added to your bill, factored into your budget.
Good advice.
Pay attention to your receipt, and don't be afraid to ask questions if something doesn't make sense.
Be a savvy diner.
Exactly. So, we've talked about a lot today. The history, the future, the ins and outs of the SST.
It's been a deep dive for sure.
But one thing's for sure. The Malaysian food scene is dynamic, it's exciting,
Always something new.
And the way we eat, pay for our meals, it's going to keep shaping how the tax system adapts.
It's a delicious adventure.
It is. So to all our listeners out there,
Yeah.
stay curious, stay informed,
And most importantly,
stay hungry.
until next time.